Okay, there we go. Looks like the stream is working. Right now we have zero zero people on stream, but that's okay. I just wanted to go over a few things regarding crypto news, which really isn't my niche. I'm more focused on the technology or the applications, you could say. But anyways, let's take a look at what's going on. We have one person just joined in. Thanks for joining in. We're going to wait until a few more people join in, then we'll get started. But in the meantime, I want to go over what's going on right here with the Cryptoverse Facebook group. So someone in my chat owns this group, the Cryptoverse. It's a Facebook group, and I try and stay off Facebook, but I joined it. So shout out to him. I just wanted to give a shout out because that was nice of him, to share his group. So if you guys want to come over here, if you use Facebook and join this group, feel free to do so. What's up, Cecil? Thanks for joining, man. You're the only viewer right now, so it looks like it's just me and you at the moment. Can you have a look at FXF, please? Yeah, sure, I can do that. So FXF. One moment. Let's see here. Let me open up my CoinGecko. And FXF, I've covered it before on stream. It kind of reminded me of Paid. But it looks like it's done pretty well. Let me show my screen again. It reminded me of Paid because from what I remember, it had to do with arbitration. And Paid, if you guys don't know, had a really bad exploit or hack. And I actually was reading some rumors that it was an inside job. I'm not sure if that's true. No way of confirming that. But now that Paid has really not done so well, it could be an excellent opportunity to buy FXF because from what I was looking at, FXF seemed to be somewhat of a Paid competitor. So let's go to the website. And yeah, on the chart, it looks pretty good. Someone was asking about Modify yesterday. Modify's done pretty well today. Performed the best out of my portfolio for the most part. But we can see here it was on like a descending triangle and it's breaking out. So it's looking very good. 37 million market cap, so still very small. So FXF is the world's first hybrid liquidity aggregator. Regulated and secure. One account, one KYC. So maybe this wasn't the. Because when I remember, I looked at FXF originally. It had to do with arbitration, but maybe I'm thinking of a different token. So it's a liquidity aggregator. Let's see what exchanges it's on. So Uniswap and Belixi. Gate.io, I believe, is like a Korean exchange. I've never used it, but we can take a further look into it. Oh yeah, and they have demo trading. That's why I was interested in this. So a liquidity aggregator, that's essentially what 1inch protocol is. I mean, it's a bit different. It's an AMM aggregator, but essentially the same concept. Dark pool trading. Investors can take advantage of dark pool trading to prevent major market disruptions. It's regulated by the Monetary Authority Singapore. That's very good. I would, before I'd buy this, I'd want to see what the KYC is because KYC could simply mean entering an email address. It doesn't actually always mean your social security or something like that. So I'd want to see what that is. But let's take a look at the demo trading. So I have to make an account. And it might not be available in the US as well. But yeah, to answer your question, Cecil, or not answer your question, but just to let you know what I think of Finks Flow or FXF. Fundamentally, it seems very strong. I haven't done my research on it. I don't know what the FXF token does. Let's see what the token does. Okay, so it's a utility token. That's good. I'm a fan of utility over governance for sure. So you get voting rights. By holding FXF, users can access 25 plus CeFi and DeFi protocols, liquidity mining, staking. You get reduced fees, dual chain. It's kind of weird they went with Tron. So the TRC20 is the Tron ERC20 essentially. Voting rights. So you basically just get voting rights and you get the right for lower fees. So I guess it's a utility token. Utilizes 2 blockchains, Ethereum and Tron. A lot of it went to the private sale. 27% for the treasury, 12%. So really almost 50% of the supply was pre-sale, or not pre-sale, private sale and team. So that's very significant. We can see their vesting schedule here. Yeah, let's see here. So right now we're at a circulating supply of about 60%, or no, not 60%, less than 60%. It's out of 150 billion or million. So that would put us at percent circulation of, just do the math, 66 divided by 150. 44% of the tokens are out. And based off the schedule, yeah, that looks just like it should be in the schedule. And this was released, let's see here, over a month ago now, February 8th. Probably a bit sooner, really, if you look at the DEX tools data. So this chart's kind of gross, but we can see that it's pretty just constant inflation for the most part. And the one that, yeah, the private sale. So it looks like the private sale tokens are already all vested. Yeah, private sale tokens are all vested. Partner sales still have some vesting to do. Farming and staking is going to start soon. Partnerships and team tokens don't start vesting until a year. Okay, so it's not a bad schedule. So yeah, FXF could be a very strong token, but I need to do more research on it. But yes, I like this one. So now we're up to 2 viewers. So I'm just going to go through what I wanted to in the stream and then end it rather soon because there's only 2 people listening. So if you guys want to go back and listen to this, feel free to do so. So let's close these out. The FXF, we'll leave one open so I can do some research. And I want to definitely sign up and see how the demo account works, because that's a very interesting concept I haven't seen before for a new project. So the main things I want to cover is first off this. And this is very big news for me because I have been working with the team from back, just helping them out. I'm not like a founder or anything. I'm really just doing like freelance work for them, really. But the idea with Backed, right? If we go to Backed, which if you guys aren't in the Backed Telegram chat, make sure you join that. But Backed is allowing users to deposit LP tokens or other yield farming or interest-bearing assets as collateral for Aave and Compound. Now, this was just released 13 minutes ago. DeFi news, Aave AMM market launched with Uni and Balancer LP token as collateral. So this is huge news. Very, very big news. So on Aave, before depositing LP tokens, liquidity pool tokens, which earn interest and whatnot from the fees, was not doable. You were not able to do it, but they just released their AMM market. So if we go back to Aave, let's go back here. Yes, so we had Aave V1, we had V2, which was their new lending and borrowing, and now we had the AMM market. So the AMM market, if you look right here, you can now deposit DAI USDC. So you can take your LP tokens and deposit them here and borrow against them. So you can now borrow against LP tokens, which is huge development for Aave. It's kind of sucks for other projects that are trying to do this because they're trying to integrate with it, but this is something that's going to keep happening, and it's a very big development. If you guys have these LP tokens, they're not staked anywhere else, you can stake them on Aave and again borrow against them. So further creating use cases for your LP tokens. Now let's switch over real quick to the main point of what I wanted to talk about in this video, which was the crypto bans. So there's been a lot of FUD, fear, uncertainty, and doubt about crypto recently due to countries wanting to ban them, mainly being India. So this is an article that was posted 5 hours ago by Kevin Helms. So it's a recent article. We have something right here about Alex Jones as well. It says he lost laptop containing 10,000 Bitcoins. Wow, okay. So new details about India banning cryptocurrency emerge. Crypto community sees mixed messages. So the crypto community is closely watching whether the government will ban cryptocurrencies, including Bitcoin. And this has been talked about for months now. But we can see right here the latest information regarding the India crypto ban comes from Reuters, which reported Sunday night that India will propose a law banning cryptocurrencies, fining anyone trading in the country or even holding such digital assets. So this is a very bizarre law to me. Trading, I understand. Like if you're someone who's trading unregulated securities in the US, you can get in trouble for that. But say, for example, someone just sends you cryptocurrency and you hold it. It's kind of a bizarre law. Now, enforcing this would be very difficult because how can you prove ownership of a cryptocurrency wallet, right? I have my MetaMask wallet, and the only thing connecting me to my MetaMask wallet is me knowing what my seed phrase is. So just thinking about this from like a law standpoint, actually proving ownership of digital assets is pretty difficult to do unless there's a clear fiat ramp to it. So if you're someone who connects your bank account to a platform and sends it to a wallet, then it's pretty obvious you own that wallet. But if you're someone who does not do that and just have a wallet with cryptocurrency and there's no evidence of fiat ever going into it, it'd be very difficult to actually go through with this. And one thought that I had was that maybe the reason India wants to ban cryptocurrency is due to this. So this is a corruption index from 2020. So pretty much the most recent data you can find. And what a corruption index does is it ranks countries based on how corrupt they are financially. So laundering money, illegal stuff, that kind of thing. But we can see how countries are ranked. The US is ranked somewhere the 70, 79 is ranked pretty well, not as high as Canada or like Finland, countries like that, or even Australia is ranked a bit higher. But India is ranked 40. So based off 40, it's relatively corrupt. And the reason I bring this up is simply because hiding corruption with fiat money is actually a lot easier than hiding corruption with cryptocurrency. So if you're a country where the government is involved in corrupt acts, or there's a whole like shadow economy that exists within the country, and India is a big producer of pharmaceuticals and all kinds of things, and I'm not an expert on their economy, but if you're a country that's trying to hide their corruption, the last thing you want is cryptocurrency adoption, because on the blockchain through smart contracts and stuff like Etherscan or even Bitcoin or really any of the cryptocurrencies besides like Monero and stuff like that, it's very, very easy to track where the money goes. So again, if you're a corrupt country, you don't want people or the whole country adopting a platform of exchange or currencies where everything's transparent, because it would lead to exposing that country's corruption. So that's just kind of a thought I had for the reason why India might want to do this. But again, that's completely speculation. I'm just kind of making up ideas. I don't know if that's the real reason, but it's kind of an interesting thought. And now let's go back to Aave real quick. I just want to go over all of the LPs they have right now. They're supporting the Uniswap and a few balancer LPs that you can deposit for borrowing. Now, this is interesting because sure, you can just earn yield on your LPs by staking them somewhere else. But in some situations, borrowing against them versus earning yield could be a better investment. And there's also the deposit APYs, borrow APRs we have here. So you can earn additional yield because, right, you're lending it out as well. And also the LTV, so loan to value rates. I'm not sure what those are. We can try and take a look at it. So no data right now because it just opened up. So we're going to have to wait a little bit to see how it goes. Oh yeah, maximum LTV. So if you deposit your DAI USDC LP tokens, you can borrow 60% of what you deposit, meaning if you deposit $100, you can borrow 60 bucks. Liquidity threshold is 70%. So if you don't maintain 70% of your loan to value, so say you borrow $60, you don't maintain 70% of that $60, you can be liquidated. There's also a liquidation penalty of 15%. And then if we go back to the article, we can also see this is the first phase of the project or launch with a total of 14 pairs. So these are all the different pairs they have, mainly being Ethereum and USDC. Now I would probably borrow against USDC because it's a lot easier to manage than borrowing against Ethereum. But they're going to be adding more different LP tokens as well in the future. So that's it, guys. I'm going to end the stream. I just wanted to go over a few new things, including the news and what's going on with Aave. And yeah, thank you guys for tuning in.